Traders, this video is the start of the explanation of the conditional order system. It is a very important video. It deals with everything you need to know to set up your conditional order system. On the screen right now is the setup screen that sits under Edit Studies that you need to go to begin with. Let me take this off for just a moment and back up and see. This is the studies that you will have on your platform. If you have subscribed to the conditional order system, it comes with a module of 3 studies. One of them is the conditional trade manager, which you put on your charts. The other 2, the new gen conditional entry over here on the left and new conditional exit, are not applied to the charts, but you will import them into your defined studies box here. User defined, if you do not know what I mean, because you haven't done this before, let me show you. I will back out of this altogether. Go back into the Edit Studies button. Come on. Click over here, scroll down. There it is, user defined. These are all studies that you would have imported. Now please ignore all of this stuff on the bottom, or at least the majority of it. This is research work. I'm constantly working on something. When you get your new gen and also the TW position tracker, I will show you that on the screen right now. The position tracker is this. It's a free study. You're free to share it with your friends or whatever, but it comes along with the package. It has no key codes. Free to use it. This particular series of studies is included as the conditional entry, conditional exit, and conditional trade manager. Today we're talking about the conditional trade manager. So let's click on the little gear here and see what our settings are. You would first determine whether or not you're using a long exit or short exit. Well, most people I know don't do a lot of short trades. Frankly, I don't do as many as I should, but that's available as well. Simply a matter of clicking here. Short exit, long exit. Order quantity. You notice there's a 0 in here, and all of mine are zeros. I never put a quantity in here because I do something called position sizing, and I strongly suggest that all of you practice it, particularly if you're going to be buying several different positions and keeping them in your account. You take the amount of funds that you have and you divide it by whatever. You know, if you have 50,000 in your account, you divide by 10, and it means you're going to put 5,000 in each trade that you make. So you just enter that amount, 5,000, and it will compute for you the amount of shares for you to trade. And I'll show it to you up here. Now, there is a position on this particular stock already in effect, and I purposely picked it so I could display the position tracker for you. Otherwise, it will not come up. If you do not have a position, it will not come up. So we'll ignore that just a little bit. Matter of fact, I will get in there and turn it off after I show it to you. So we have other settings. This is your profit target. This is dollars and cents. What kind of profit do you think you'd like to make out of this trade? And this is a trade risk. That is the same thing as your old-fashioned stop. You know, you typically make a trade, you put a stop. That's what that is. And all it's for, and I'll show you in a second, is to show you what to put into the conditional order system. And then there's an interim risk. Now, an interim risk is a lot different, but I'll explain that when we look at the charts. Just remember that interim risk, and this interim risk can be based on 2 different things. It can be based on this value right here, or it can be based on something that is computed for you by the platform called volatility momentum. Now, I really love this exit strategy. It's not the only one that's out there. You can use the other if you're comfortable with it. But I love this volatility momentum because it it generally will keep me into the trade longer if I'm careful about how I set it up. And I'll always show you those steps today. There's one other thing that we may or may not talk about in this video. It's called a 3-bar close. It is just a little gadget, so to speak, that you can use while you're trading live to help you find exits. As a matter of fact, all of these exit strategies here can be used while trading live because it displays little suggested exits on the screen. See these little arrows? Speaking of those little arrows, you can adjust the size of them by going over here and selecting a smaller size. Now, this is for the chart that's behind this, and it's neither for this chart nor for this chart. So if I change it, you won't notice it on those other charts. But I will change it to a 1. When we go back, you'll see that it's much smaller than the arrows over here. Bars back. That's pretty important to get a handle on that, but I will tell you this. If you put too small a value in here, the platform, the TOS platform, will pick it up and tell you that it's too difficult, or the probability of successful computation is not likely to occur, and it will reject your trade. So even though, and I put this in from 5 to 10, I never trade the 5 simply because of what I just mentioned. So I've gotten away in most cases with a 7. You'll never get in trouble. It won't let you make the trade if it's too small. So you're okay there. But use somewhere between a 7 and 10 unless you're trading a real fast moving market. And I'm not really sure why you're using conditional order system to do that. It's generally designed for something that you want to walk away from your computer. And unless it's just, you have to get to the bathroom and just want to cover yourself for a few minutes, I guess you could do that. And what it does is it's how many bars back that it looks. Like you see these little signals here. These are actually exit signals. And what it did is it went back so many bars, and in this case it went back as many as 10 bars, and found the highest close. And then it computed from that highest close whatever you selected, and either the volatility index, and I'll tell you how that's computed in a second, or this fixed figure of $125, depending on which one you choose. If you choose this one, it will compute $125 from the previous highest close within 10 bars. I know you got to wrap your head around that, but it's really pretty simple when you boil it down. The volatility index is a whole different ballgame. It goes back, in this case, 30 bars. I could change that to 40 or 20 or 50 or whatever you have in mind. You have to kind of find a happy medium. If you go back too many bars, it may go back and pick up the volatility of a lot of bars is not really reflective of what you're trading right now. And you know what? It changes. As this goes on, even after you've entered the trade, it continues to sense the market and what the volatility is, and it changes what the exits might be, because it is based on what it senses in the past 30 bars. The historical value is what is the standard deviation. Now, I know you've heard of some indicators saying this line that goes across the screen is 1 standard deviation, and this is 2 standard deviations, and this 3 standard deviations, and you see that they get spread further and further out from the middle. That's a standard statistical plotting of the bell curve on both sides of the median, or mean I should say. But we're going to use 1 standard deviation. If it fluctuates more than 1 standard deviation from the mean of the volatility, that's what we're really tracking, then it will exercise an exit signal. Over that, it's just too much. You have to lose too much money before you get out. Let's see, what else? Is there anything down here we need to look at? Oh, the rest is just what you're going to see and what you're not going to see. And I've already trimmed that on the 2 charts. The middle chart, I think, has it all. Well, yes, this is a middle chart. It has it all, and I'll explain all the labels to you. The other charts, I trimmed them off because you don't need them. And it just gives us a little more room on the charts. Okay, enough about the settings. Let's take a look at the actual chart. Okay, here are all our labels. We have mom and dad here. Now, I have a clue for you. You might want to consider this, and I'll just show it to you. It's certainly not, mandatory that you do this, but you notice how much smaller my arrows here now, the little trade arrows, how much smaller they are? They're tiny little rascals, aren't they? I kind of like those, but for video purposes, I'm going to turn them back to a larger size. I just wanted to show you that you could do that. Now, the other thing that I want to show you is that what you might want to consider is to take a look at how these things are ordered. I think if you did this and put it on the top, right? It doesn't make any difference where you put these other two, but put the trade manager on the top, and I'll show you what happens. What happens then is all the labels come up on the top of the screen, and later on when we're doing the conditional order system, it is pretty important that we see these labels, and the order portal comes over the top of the screen and it pushes them up to the top to make them a little easier to see. You can still pull it down, it's not a big deal, but I just thought I'd mention that to you while I was here. Now you'll notice over here I have a trade in place for 28 shares. I entered at 355.64 and I'm up $257. I entered this trade yesterday. Okay, current price is 358 over the top, and I entered for, and the reason I show you this because a lot of people say you can't make money with just 28 shares. Malarkey. I make a ton of money, and I do it because I buy expensive stock that has great moves. A Google and Amazon and a Tesla and an Apple, all great buys because they all move a lot because they're high price stocks. And you can buy them. You don't have to have a big account. You can buy them, 2 shares. If that's all you can afford, fine. You can still make money off of it. That's what position sizing is about, and I encourage you to use it. Now, I'm going to take the, I'll just remove the label. We don't need to look at it, but you've seen it. So here it is here. We'll just take it off. All right. Now it's gone. So let's talk about entering trades. This is the name of the game. The name is, what if we entered on this signal? That's the name of the game. This is not about trade entries, people. This is about trade exits. You'll notice that the screens are not even the 3-to-1 ratio. That's because this is not about trade entries. This is about trade exits. And I picked the times that are available to you in the TOS order platform. The 1 hour, the 4 hour, the day are all available times. I do not believe you will find the 3 hour. I may be mistaken, but I do know that it's 1 through 5. It is the 10, the 15, the 20, the 30 minute, the 1 hour a minute. Yeah, probably 4 hour a minute, hour, 4 hour day, I meant to say. I think 2 day, 3 day, or something in that regard, week, month. It's all listed when you get there. And if you must, I can go there and show you, but I will show you later on when we actually get into the conditional order system. I don't want to interrupt with the setups here and have to come back. So we're going to play like we entered the train. I drew a white line here so we can kind of refer to a cross point on all 3 charts. Now all 3 of these charts are set for, I think we messed around with this one. Let me go back and see if it's still set there. Yeah, it's still volatility. Oh, recall the 750, recall the 1 1/4, just for reference point when we're looking at these charts. If we entered here, the volatility index would take us out somewhere in here. Now, that's in my book. just not enough of a move. I would like to have something that allowed me to ride through this big candle. Some of the others of you may decide, no, 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 that's perfectly okay. I don't want to take that ride. I'll just take my money and run. Well, you can. It won't be a great deal. It's going to be 5.83 points from the highest close. That's how much it comes down. And if the highest close would say 301 and you entered at say 294, well, okay, 301, 294, that's not too bad, is it? Well, it's not a lot, but it certainly is enough to make you a little money. Uh, about 7 points, is that what it is? Yeah, something like that. But, in my case, I only had 28 shares in here. You might have only had two. That's $14. Is that really enough for you to make a trade? I don't think so. So you might consider that this little drop here with a small number of trades, it really doesn't amount to that much. If it is up here at 300 or 301 and it drops all the way down here to 297, that's only a 4-point drop with two trades. What is that? That's nothing. You're not risking a lot of money. So we said, okay, that's too short. I want something better than that. Okay, fine. All you need to do is think about exiting on a different time chart. Just because you entered on the 1 hour chart doesn't mean you need to exit on the 1 hour chart. Or if you entered on the 4 hour chart, you can exit on the 4 hour, you can exit on the 1 hour, or you can exit on the day. It's your choice. And you make that choice by looking at these charts to see which one is the most attractive to you. Because pretty much what the setup is here, it's pretty much always going to be. And that is the relationship between the two charts and how the volatility is related to those charts. And that changes from day to day. But you apply it on the day that you make the trade and you'll be okay. Okay, again, here's the same entry point. The exit now is down here. You say, whoa, that's way under where I was looking at it before. Well, at the first jerk of the knee, you might think so, but it actually relates to this exit up here, you'll notice. So that's a considerable amount of difference between that exit and the other exit. So it's a wow, then the day chart, that ought to be really great, right? Well, yeah, actually it is. It's up here. So what would you do? What would I do? I would take a trade on the day chart, and I'd take an exit, I'd take a trade on the hour chart, and I would take an exit on the day chart. I would ride through all this clutter and this bull garbage here. You know what? Look at this. 352.71, right? We had an entry point, if you recall, of 294. One of the things on the labels other than exits is your target points. Right here, you put in you wanted to make $750, or so we did for this example. That's 53 points. Well, we said that the entry point was what? 294? Is that what we said? Yes, it is. And if you add 53 points, we'll just round it up to 54. And what do you have? You got 348. You know what? Price would have exited you right here. You would have never gotten to your exit point of the volatility index because it would have taken you out at profit at $750. So wow, what a deal, huh? It allowed you actually to ride all the way up to where your target was without getting stopped out. Now I bet you never had that happen before. So here you go. If you didn't have yours, if you had to set it $1,000, it would have still taken you out here. There's not much you can do to override this unless you go to a week chart or something like that. What you can do, however, if you just insist that you don't want it to get out here, you can go back into the conditional thing and say, I want to put it on risk base, and then you go back and reanalyze it. You notice there is still a signal here. There's a signal there. So you have to risk more than that for it to run longer than that. If you want to, you can. Yeah, it'll let you do it. I'm not saying, oh, well, that's it, you're done, whatever. Let's double the risk. Let's go to 250. You say, I'm willing to risk $250 to make something more than 750. Okay, your ratio is starting to get smaller, but still, it's working for you. Look, it's working for you. Is it? No, it isn't, because this bar goes way down here and it takes you all the way down to $250 loss. That's why that volatility momentum index is so good. Now, there's another word in there that I haven't been spoken about. That's that momentum word. What's that all about? Well, when momentum shifts as measured by mom and dad, it will take you out of the trade. How about that? So the whole thing was designed to give you absolute security about not getting stuck in a trade and it just goes all the way back to your stop. We didn't want that to happen. So you can get out with the volatility, you can get out with a risk base if you want to, or you can get out, if you do the volatility, it will also incorporate momentum if that kicks in first. So it's great. I mean, you're covered. All grounds you're covered. Now I want to talk a little bit about some of the other labels because we're going to need those when we get into the conditional order system. This stop, again, you've put in $125 if you'll recall. This is 8.93 points for 14 shares. All right? We put in $5,000, we got 14 shares. You can't buy a piece of share. All right? So, and this is at this price. If the price goes up, then of course you'll have fewer shares. So that's your stop. And since our interim stop is going to be the same thing, it's 8.93. You would put that in the field in the conditional order order portal. I'll show you that when we actually cover those. The VI stop is actually the amount you allow to flex in the VI stop. You do not have to enter that anyway, strictly for your reference point so that you can look from chart to chart to chart. And that obviously explains why your longest exit strategy is on this chart rather than this chart, because you're allowing more movement. Now you say 15 points. Wow. Again, that's a lot of points. Is it? Come on. We're talking about 14 shares. You notice that over here it has 28 shares. Well, I want to show you something. The reason for that is because I simply had 10,000 in there. We change that back to 5. It's not going to change any of the other figures. The only thing it will change is the number of shares that you are to buy. And now it is 14 as well. See how it works? But your stops remain the same. The only thing it is if you take a look at what your tick values are, and I know that can be confusing, let me make it easier for you. I won't do that. I'll do this. I'm just going to pop in, say, DES, all right? Real quick like. I said real quick. I'm coming now. Hello. Yeah, here it is. Now let's take a look at the tick values. The tick value is a quarter point, and it's worth $25. Well, you know that's not true. A quarter point on ES is worth $12.50, but we have 2 contracts. It computed 2 contracts for you. So each tick is worth $25. Now let's go back to the stock, which was, it's not what I want, wrong box, which was Apple. Yeah, it's coming. There it is, 14 cents, because we have 14 shares. Now, Really and truly, you cannot buy like you cannot buy this tick value. You can buy a quarter point, you can because it's priced by quarter, but you're putting in dollars. You're not going to send, 14 cents to TD Ameritrade to make a trade for you. You're dealing with whole dollars. So what you think about is that, a whole full point, you just multiply that by 100, or you just move your decimal place 2 places to the right, and then you're working with 14. So if you multiply uh, the value, it's still going to be, dollar for dollar. It's $14 is what it is. So a move of 1 point is $14 because this is a tick of a penny. Again, multiplying it by 100, it gives you a full value of $1. So think about that. That is truly the tick value. That's really what it is. It's a penny, but we don't trade in pennies. We trade in full shares, which are full dollars. Can't buy partial shares. So when you're looking at this, don't get confused if you need to multiply it. Like if you say, how much is 11.767 points? How much is that? Well, you just take that and multiply it by 14, and that's how much it is. That's how much you have at risk. Or just to round it off, let's just call that 12 points right here. Let's call that 12 points. And we want to know how much is that really at risk. And you multiply it by 14, and you're going to see that it's 100 and quick brain, $168 risk. That's how much you're risking with this volatility movement. This one over here, we would just round it off, say at 16, and that's going to be just a little bit more. Let's see, about $188, something like that. It was just what, 4 points, yeah, something about another $6. And that's how you can determine exactly what this means in dollars and cents. Okay, I think we've covered all of this in regard to the conditional order system. Now we'll go back and talk to you a little bit about. Here's a quick way to get there. You right click on one of those little arrows and it gets you there immediately. I want to talk to you a little bit about something you kind of play with. I think it's kind of cool. And it's called a 3-bar close. You apply that. Now forget the other charts. We're just going to look at this one. The other charts still had what they had before. You still have the labels and stuff and all the information, but these exit arrows are generated on something entirely different. This is the 3rd bar, 1, 2, 3, and it goes back and it measures a predetermined amount that if it's fallen and fallen and fallen on the 3rd bar, it shows you an exit. And that's exactly what it does. You have a lower close and a lower close from the 3rd bar. You have again the 3rd bar. You have a lower close and a lower close, and on and on. That's all it does. It just shows you suggested exits for short-term exits. That's it. Now, it's not going to show you good exits if you are in a downtrend, because remember what you did is you selected a long exit. So if you're in a downtrend, you're going to have to select short exit. That's true either way with what you're using the other exits of the volatility and what have you, or you're using the 3-bar exit. Like I said, I promised you in the beginning, the 3-bar exit is no big deal. It's just something to give you a quick reference that, oh gee, maybe I want to get out of this trade. All right? You notice the symbols, the exits are in the same place, because when it drops, it also creates the kind of volatility to cause a volatility exit. So that's all there is to the 3-bar close. Now, the next thing we're going to move to is the setup for the conditional order system. Okay, traders, I've switched charts on you. What I have here is Shopify. I was reading Barry's letter. I actually stopped the video. I had to leave and go take care of some personal business, and I came back and Barry's swing trade newsletter was in my mailbox, and I read it. And if you haven't seen it, you ought to check it out. I'm sure it's worth the subscription cost. And there was some comments about, the overall general market. The PMIs were up and overseas, and anyway, China was green, U.S. dollar was down. All the good stuff was postured for have a good market today, and we are having a good market today. Um, but there's another little thing. It's kind of like trade ideas. So I flipped over there, and one of the things they talked about was Shopify because of their new partnership with Walmart. Well, I flipped it over, and frankly, it's a little too late in the day for a trade for me because of the methodology I use. Somebody longer term, it might be fine because this is kind of like a wave one, a long wave one, but kind of like a long wave one on a 4-hour chart, as well as a day chart. But it wasn't short enough for me, so I decided I would pass on it. Then I got to thinking, what about Walmart? I mean, they're in partnership with Walmart, and Walmart's a good strong stock. There's nothing wrong with it at all. So I looked at Walmart. I says, wow, look at that. It's been on the downside, but guess what? It's broken the 50 moving average. I don't have a signal yet, but I think I'm going to have one. I think I am. And when I look at the exit points on here, I can see that I'm, having worked with this thing for a while, I can see that just going back here, I can see that, well, this is a downtrend, so it's not going to tell us anything. But if I scroll this back just a little bit to get us back into an uptrend, it's going to take more than a little bit. Looks like, here we go, this little section right here will work. You see, I had a signal here, and wow, this is really great. Even now, I've got a real low VI, but yet it's not taking me out. It would have taken me out right here, but it's not taking me out. I look on the longer chart, and that's not so good because I get all the way up here and I come back here and it takes me out. So it's too big. And even there, it's small. So, gee whiz, what am I going to do? Well, it looks like to me that I need to get in on the hour and get off and get out on the hour, because on this particular chart it works very well. I get in here and actually would be taken out here. And considering I ran into that big red bar, that's probably a pretty good idea. But I must admit, that is really an unusual move for this particular stock. So I want to be real cautious about making that decision based on one slight point. So if I go back here, which is way back, and I don't like entries this far off the moving average, so I would pass that one up. It has to be a little closer to home to make it attractive to me. So I don't see anything there that motivates me to trade in the background, but we are talking about now. And here it is right here. Here's that move, and here is, well, there is an exit here. I don't like that. So let's look at the 4-hour chart. Well, I don't have much to work with because we just don't have that much time. So what I'm going to do is I'm going to roll this back and give another example of where it happened. Here was an entry, and I didn't have an exit signal until here. That looks pretty good to me because it's already started a down run. I'm not really looking for an entry on this longer chart. I'm just looking at how it moves, crosses here. It just happens to be the same place as the other, and it exits actually about the same place, maybe a little longer. So I've made up my mind. Here's what I'm going to do. I'm going to take an entry on the date that's easy for you to say. I'm going to take an entry on the 1-hour chart, and I'm going to exit on the 4-hour chart. Okay, am I really entering now? No, of course not. I don't have a setup for it, but that's what I'm going to do. Watch, here's how we're going to do it. We're going to go buy this thing custom I'm going to use a blank entry form that I had here. Now all my data comes back up. I should have 5,000 in here, and it tells me I can buy 41 shares. Okay, so I'm going to change this to 41. Do remember that you need to leave your cursor in the field anytime you're doing any edits anywhere on TOS, whether it be in edit studies or whatever. And if you're not careful, you'll think you have it done and you leave and you won't, and that might have some nasty results. Okay, I've changed all this to 41. I need to make sure that this is an error code. I want to show it to you. It's not important in this case. It simply says we don't have enough space on the screen, so that it's not showing volume. But I just thought you might want to know about that. So if you ever see it, you can click on it and it tells you what's wrong. In this case, it's not really wrong. It's telling you the situation. So we're going to go over here. I've already set this up to be market, 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 and GTC all the way if you're just starting out. And once you get this part set up here, you click on this and then you just save it. And then when you come back to it, just like the one I had, it was the COS, I forgot what it's called, open or basic COS, and it just gives me all this screen that's already set up. Now I could actually go all the way through it, select my stock, my study, and everything, and save that as well. There's a problem with doing it that way. For me, it might not be a problem for you at all, and I'll explain it. Here's how you do it. You click on this little gear. The first thing you want to do is you want to drag this down so you can see your labels, okay? Now you notice you can't see the bottom, so you'll shrink it up. Now you can see everything. All right? So we want to buy, and we're going to click here, and our symbol automatically comes up. If you had already set it up, the previous symbol would be here, and you'd have to type that in. That's kind of a pain to me. This says study and edit. If you'd already set up, it would have the study already there for you. There we go, and it comes up simple moving average. I do not want to trade on the day chart. I said I wanted to enter on the 1 hour chart. So now we're going to edit the study itself. This is real simple. You click here, you click here, you go back and you click here, you drag it all the way to the bottom, just like you're under the edit studies thing, and click. And then what are you looking for? I'm looking for my TDVT New Gen Conditional Entry. That's the one I want. Okay, I want to add nothing. It's just a TDVT, plain and Jane, single trend, and it is true. And we're going to save it. And okay, and it's okay. Now, and we'll save it. Now this is done. This is all. Now what's going to happen is when you get a signal on that 1 hour chart, we don't have one now, but I'm anticipating that we will, because it's already made its turn. It's crossed the moving average. It's already had a signal here earlier, but I'm thinking we may get another signal, because you see it's kind of doing a little retrace. And right now mom and dad is down, but the trend is up, so it'll turn, and when it turns and comes back up, I want to be there to catch the signal. Okay, now we're going to do the exit portion. I told you I was going to exit on the 4 hour chart. So we do this. Again, we want to make sure that we have access to our little window. You might have a really big screen and it wouldn't make a difference, but it makes a difference for me. So I got everything I need here. So I click, my symbol comes up, I click, and I say I want to do a study, and I want to edit that study. And I wait. Now I want now here's all the times that you have to deal with. 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes, 10, 15, 20, 30, 1 hour, 2 hours, no 3 hour, you see. 4 hour, I mentioned that earlier in the video. Day, 2 day, 3 day, 4 day, week, month, pop, pop, pop. You have to select one of these. It's not that critical. The difference between 3 hour and 4 hour is not that critical. Not for this. So, okay, we're going to edit it now. Remember the little 1, 2, 3. Click, click, 2, and 3. Now we're going to do the exit. So we click on that and it comes up. Okay, why do we need to have this thing pulled down? So we could see some information. It says here that our profit target is 18.3, just rounding it off. We don't know what price we're going to get into, but we can guess. We can guess it'll be somewhere around 130 bucks maybe. And if that's the case, and we have 18.3, 130 bucks, that's $148.30. I'll just round that off to $140. This is my profit target. Now, what if I'm wrong? What if it takes longer to get in? Well, you've got it up there pretty far. If it doesn't get in before it hits 140, there's probably something wrong with the entry anyway, because we're talking 18 points, and an 18-point move on Walmart's about 15%. So I'm pretty sure if it continues up, you're going to get a signal on that. We're not going to put anything in for the stop value. Remember the interim stop back we talked about is 3.0433. It's actually larger than the VI, so I'd rather, since the VI has been really measuring pretty accurately, I think I'd really want to do that so that it backs up the least amount on me, but only backing up when the volatility turns against me. So yes, I'm good there. I want to change this look back that I talked about. I mean the bars back. I want to change it to 7. I probably wouldn't have a problem with 5 on this one because of the smoothness of the stock, but just to make sure I don't get a reject. And if sometimes it's too short, it'll reject your order because they don't think their system can process it quickly enough. So we're going to save this one as well. And we say OK. And we save. Now we only have one entry left, and that's our stop. And it says we need to allow 3.04. I'm just going to do 3 points. Okay. So 3 points. Put 3 points in here. It's a -3. Delete. 3. Now we're done. It's all there is to it. So you confirm and you send. Now the trade has been entered. It's entered live. This is a live trade. So I'm just waiting to get a signal on this chart, and then I'll be in, and to get a signal against me to take me out, or I'll hit profit. Now you see this here is what your exit is, and you can change that simply by right-clicking and then hit cancel and replace. And you can go in here and change your target by going in here and going back and changing what you want that target to be. But we're not going to change it because we're fine right now. And that's pretty much going to end this video. I'm going to do another video talking about some other aspects of the COS, the other things that you can do with it, and some other things that you can do with the Trade Manager and handling it for live trades. But this video alone is enough to get you up and going and trading. The other stuff is just extra stuff that you really don't need to know unless you just want to have these extra little things. So that's it for today. Happy trading. The market's great today. I'm loving it. So you have a great day, and I will see you on the other side.